Good morning and welcome to Unusual Activity powered by FinancialJuice.com with George Avedon and Milton Marmonides. Special guest this morning, Norman Hallett from TheDisciplinedTrader.com. We'll have him on in the next 15 minutes or so. Folks, lots happening overnight into this morning with macroeconomic, geopolitical indicators. Let's get into the numbers this morning, and then we'll get into what the central themes of the days are, so you folks can get yourselves ready for the day. We have the S&P futures, the ES, lower by 3 handles at 2059 even. We have crude oil now below that 50 mark at $49.53, lower by 51 cents. That is continuing its rather volatile mode since about we're going on about 2 weeks now, where we had a lift in oil into that 48 range and then really above that 50 range. So again, we're keeping an eye on that rather rather closely. We want to bring this up. We don't usually bring it up this early, but natural gas futures higher by 0.141 at 2.821. We saw yesterday a considerable lift in natural gas futures during the day yesterday. You saw that in the UA app. Unusual activity news, and that really is, there's various information coming in from weather sources that the next few weeks could be interesting, specifically for the Northeast, as it relates to cold weather and severity of a weather pattern. So keeping an eye on that as well. Gold higher by $1.90 this morning at $1,234.00. We have the 10-year at 1.988. We hit that 2% mark yesterday. The 30-year, folks, at 2.568. Now above that 2.5 level. We saw that all the way down to 2.2 area not too long ago. So again, rather volatile markets all around. Additionally, keeping an eye on the dollar. Both the dollar and the euro is slightly higher, 1.1318. Dollar, the DXY, the dollar index versus 10 other currencies at 94.805. And again, the euro at 1.1318, higher by 0.0, actually just ticked down by 0.0001. So call it flat so far in trading this morning. So we wanted to jump in. Certainly a lot happening on the geopolitical side. We're keeping an eye on the Middle East, specifically for several different reasons. One is the ISIS-ISIL situation, certainly keeping an eye on. We have this hearing this morning that President Obama will be speaking to Congress for an authorization for a limited, quote-unquote, limited 3-year boots on the ground in a limited capacity, getting some authorization from that with respect to the ISIS-ISIL situation. So we're definitely keeping an eye on that. Keeping an eye on Saudi Arabia, OPEC. We've been mentioning this day in and day out, but we feel it is rather important. Since the death of King Abdullah, we've seen oil tick up considerably with very little I would say limited rhetoric from Saudi Arabia, but really just indicating that no change in stance versus supply and production. So keeping an eye on that dynamic rather closely. Let's get into the U.S. economic data. First, of course, we always monitor the Baltic Dry Index to 553 points, down 0.5. We did see a little bit of lift yesterday, but really the trend as of late has been to the downside in the Baltic Dry Index. And this level for the Baltic Dry Index, those of you who follow it, is near that all-time low. And if you're new to Baltic Dry Index, this is a great index to monitor rather closely. It tracks container ships with respect to grains, raw materials, and just a great, what we think is was considered to be a great leading indicator in terms of economic activity. This morning in the U.S., Mortgage Bankers Association applications numbers, we have the composite index lower by 9.0%. Purchase applications lower by negative 7.0%. The refi applications lower by 10.0%. Folks, what we see here, those of you who follow treasuries, the 10-year tends to be I don't want to say leading indicator, but definitely tends to be a bellwether for how the application activity, specifically with the MBA, the Mortgage Bankers Association. So we've seen a rise in the 10-year, so it would point to a rise in rates when discussing mortgage rates. So that's something that we want to continue to keep an eye on. This morning, Richard Fisher is speaking at 8 a.m. Should something specifically come out from that, we'll certainly pass that along. The EIA petroleum status report at 10:30. Again, with the volatility in oil, we want to make sure we keep an eye on these reports and the specific reaction in the oil markets, in oil names as well, in the underlying oil names. Certainly today we have the 10-year note auction results. That's at 1 o'clock. And then we have the Treasury budget, 2%, 2 o'clock this afternoon. Again, Treasury budget report this afternoon at 2 o'clock. So few things we're keeping an eye on. Obviously, the central one of the central themes is what we've been following rather closely is the Greek debt situation. And folks, we'd have to go back to our Greek, our high school and college days when we used to read the Greek dramas. This is the making of an interesting Greek drama. Certainly, Greek debt is on the discussion for the meeting at 11:30. We want to see if there's any commentary and see what kind of posturing we get from the individual officials, country officials, from Varoufakis and Tsipras. Certainly, also having a German official saying that the existing program in Greece is the basis for further negotiations. Will they or won't they forgive the debt? Certainly, and the question here is, as what we've been discussing with Milton quite a lot, is if they do forgive debt, this could basically set a precedence for other countries, and that's something that, again, we're keeping an eye on commentary and posturing through these days and into the future. Fed's Fisher commenting that inflation easing would not push back a hike in interest rates. We've been commenting that this lower oil price has an impact on both CPI and PPI data. Clearly, in the target rate of 2% inflation, we're not there clearly, and so we'll continue to monitor that situation. A few things as we're discussing oil. Goldman commenting the decline in the U.S. rig count likely remains well short of the level required to slow U.S. shale production. So again, we'll continue to hear commentary from analysts, from pundits, and so forth. Yesterday we had Citi come out that they're looking at oil at $20, and that certainly throws some more ingredients into the pot here. So central themes here before we get into the technical analysis with Milton. We have continued euro volatility, dollar strength. We discussed that at currently at 94.786. Continued oil volatility. We want to see this deflation risk, see what kind of rhetoric and how deep does quote-unquote deflation runs into the lexicon of central bank officials. Certainly watching the Treasury yield curve. We'll discuss that in a few moments. Russian economy back in focus. And really, there's another meeting in Minsk in Belarus this afternoon with respect to Ukraine and Russia. We are still in the midst of earnings season, and as that information is coming out, we'll certainly pass that along. So without further ado, we'd like to bring in Milton for the technical analysis prep for the day. Milt, certainly a little bit slightly tamer futures this morning. What are you seeing this morning? What's on your radar this morning?
Well, the only thing that, in my opinion, that matters in volatility-wise are two things. You have the oil number at 10:30. Then you have the Greek, the EU summit. I believe that's also at 10:30 or 11:30, I believe.
11:30 this morning.
11:30 this morning. So that's the only thing, in my opinion, that really matters. Earnings seasons is basically done for now. All the big boys have, reported. There's a few stragglers here and there. But other than that, it seems to be back to that international view. Ukraine, Greece, oil, and we have the economic numbers. Other than that, the market seems to continue trucking higher. It seems to throw everything away, and the move clearly is still to the upside. Even with all this outside negativity around the markets, it just pushes it away, hides it underneath the carpet, and continues higher. I'll do some quick tech because we have a great guest on today, so I'll just make this quick so we can jump onto that. Jump on the ES first. I'll give you the two main numbers we're watching on the ES is that 2068 upside resistance with that 2050 52 support level we're keeping an eye on. Below that, they're building. I was speaking with a technical guy earlier this morning, and they were possibly building a short-term uptrend here. A break below that 2040 level is a break of that uptrend, so we're going to keep an eye on that. It's in a range between the 2000 to 2050 levels. We're going to watch everything, keep an eye on these prints, the 2068 upside, 2050 intraday support, and once those levels are broken, we'll shoot over our next levels to keep an eye on. In regards to oil, oil this morning was down 75 cents. API numbers came out yesterday after the close. Not that big of a build. Interesting to see oil down this morning about 1.5% with the oil inventories coming at 10:30. We're watching this level. Ideal level on the downside support is the 48 number, with the upside resistance right now at about that, we can say $50, $51 on the resistance side. So we're watching 48 downside, 50, 51 upside resistance. Oil numbers come out at 10:30, will be volatile, and something to keep a close eye on is also the U.S. dollar, which will be mentioned later, which currently is trading a little to the upside, very small upside move. So we're going to keep an eye on that. Keep an eye on the oil numbers at 10:30, all in regards to trading this commodity. Next up, we have the VIX. We mentioned the VIX it's in a range right now. It's in that 14-16 support to 20, 21, 22 upside resistance. It's basically trading right above support levels right here. We'll see where it opens up pre-market, but as of now, it's in that tradable range. 14-16 downside support, 20, 21 upside resistance. Once those levels are broken, we can get a better idea of a move. But as of now, that's where they are indicated. Gold. Gold broke that 1250 number. Now that number now becomes resistance. The range is back to that 1200, 1250. Keeping an eye on it. It's right in the middle of the resistance levels right now. We're watching it. We're keeping a close eye on gold. If it breaks above that 1250 number, it could retest at 1300. But as of now, 1250 upside resistance, 1200 support. Volume has slowly, gone away in gold. It's really not that much going on volume side. So we're going to keep an eye on it. We're watching it right here. We're watching these ranges, these levels. Currencies, basically flat. Euro is basically flat. The U.S. dollar is basically flat. Small upside possibility, but other than that, it seems like a quiet morning on the currency side. George, I'm passing back to you so we can move on to our guest. George?
Thank you, Milton. Thanks for that, folks. There you have your technical analysis prep, if you will, for the day to come. Again, the real concentration here is the international side. We'll continue to monitor the commentary, posturing, the punditry, if you will, that's amassed globally about the Greek situation. And again, once when we hear of information, we'll certainly pass it along to you folks. So without further ado, we are honored to have with us Norman Hallett from the Disciplined Trader this morning. Norman, thank you for joining us this morning.
Well, thank you for having me, George. I'm still looking up the word punditry, but I think I know what it means. I want to, thank you for having me on. It's fun just to kind of get up, and sometimes when you talk about what you're doing, it kind of makes you more disciplined, and that's really what I'm all about. As people who know me from the Disciplined Trader or the 4-minute drill for traders that I do every week. I think I just recorded the 173rd Saturday 4-minute drill, so I've done them for 7 years.
Congratulations.
And, that is, and sometimes I feel like the only torchbearer for the importance of the mental and emotional issues when you're trading. I mean, I believe it's clearly 50% of the time you should be spending on your trading in total. Most traders, I would say, most traders, meaning 95% of traders, spend really little or no time with their mental and emotional issues and training themselves, because really, if you've got a solid trading plan, even if you have a good and not a great trading plan, you can win and do some tweaking if you're disciplined. But when you're not disciplined, it's like not having the stats when you're running a business. You don't know where you are, and that leads to the failure. So if you think about 95% of traders not being disciplined and 95% of day traders losing, I think there is a direct reason why. But today I want to have a little fun from my normal talk about the mental and emotional issues. I mean, you certainly can go to the disciplinedtrader.com and take a look at those kinds of things. But there are a lot of great things going on in the market right now, and I think a lot of things that are very tradable.
So Norman, let's give us a little bit of background about you. How long have you been doing what you're doing now? How long have you been? You recorded your 173rd Saturday. Congratulations. How long have you been in the markets? And then we'll jump into what you're seeing this morning.
Okay. Well, I started out in the when options were not even exchange traded options. I started in the business in 1979.
Okay.
And I sold Makata Metals options. Out of Makata Metals, of course, Amar knows, and from one of the largest, not the largest, independently held corporation in America. Still, they're gigantic, and in the world, I mean. They hold the actual precious metals. We sold options based on those physical precious metals before their exchange options. And I remember when I was just a broker on the phone, and I was recommending gold and silver call options. That's all really we could do, buy premium. Mm-hmm. But when you were right, you could be very right. Of course, now the market's matured, and you've got approaches through options that you take. But then it was buying puts and calls, and we were buying gold and silver calls before the Hunt brothers drove silver to 50 and gold reached the first time it reached 850 in January of 1980. So I was there 3 months getting people into 6-month gold and silver options, and 3 months later everybody was 5, 6, 10 times their money. And I thought to myself, boy, this is the greatest. Where have I been? I can really help people. Of course, it was hard to help people when you're just buying puts and buying calls in the long term, but that experience really was so impressive to me that I never left the business. I've always been either on the fringe of it or right in the middle of it, mostly right in the middle of it. I've spent time as a CTA managing several million for my own fund. I spent a year with Payne Weber, helping them raise money for futures management, and so I've been around about. And then I went into, of course, just trading on my own for years. And when the internet hit, I said, I have to get out there and share the importance of the mental and emotional issues. The fact that I'm married to one of the country's greatest hypnotists, and over the years, she's helped me with my mental and emotional game. And I thought, I've got to quantify this. I've got to compartmentalize this and maybe present it to other traders to help them, and do it the trader way. Instead of the mental and emotional training being a 20-minute, lie down, close your eyes, and feel good. I know traders don't like that, so we perfected the 6-7 minute mental training where you sit in your chair and right before you start trading, get focused and get your mind in place. Those simple things I've learned, have helped thousands of traders over the years. So I've been in the business for all this time, doing various things as an IB, and as I mentioned, some of the firms that I've been with. So I've always maintained a particular excitement about it because I see what happens when traders are disciplined and when they approach some of these markets with fundamental logic, and then depending on the technicals to exercise that logic.
Sure. So let's dive in. Let's spend a little bit more time on more slightly higher level as we have been. So when a trader prepares for the day, how do you what do you recommend in preparation for the day? What do you do? What do you recommend for traders to get their head around what's happening in the marketplace, not yet structure a trade, but really get their head in the right place, if you will?
That's an excellent question, because that is, if there's no other message I'd love to get across, it's what I do and what's working now.
Sure.
Thousands of others. So what I do is, the first thing that I do is I take my 7-minute mental training. The thing about it is that when we make repeated mistakes as a trader, when we're constantly not pulling the trigger or moving our stops and not following our trading plan to the T, what we're doing is we're acting on subconscious patterns that really control what our conscious mind decides to do. Our conscious mind makes all the decisions, but it makes those decisions based on what our subconscious mind believes is true for us. And a lot of these subconscious patterns that we operate by today were set before we were 7 years old and couldn't really fill everything we heard. We thought we were in the learning and accepting process. We were building neural nets and neural pathways in order to hold. Every time you get a stimulus, your parents, when you're 6 years old, you hear them arguing about investments and how stocks are gambling. And you get emotional because you don't like to hear your parents arguing, and that sticks in your mind that trading is gambling. You don't really know exactly what it means, but when we try to trade in this day, what happens is that because it's an emotional high, that situation occurred with your parents, it sends it creates a neural pathway with that message to your subconscious mind. If you either at a high emotion or a low emotion repetitive message with the same message, if your parents tell you that you're a smart kid all the time, somehow as an adult you believe basically that you're a smart person. Parents that don't give you that support, you seem to be fighting your self-belief in later time. So what happens is you create these neural nets which are true for you. This is what you operate by, so that when your trading plan tells you to take a trade, gives you the stimulus to take a trade, then you hesitate because trading is gambling, and you don't want to, you don't want to be in pain like you were when your parents were arguing. I mean, it really, this is how it works. And so what you need to do to change that is build neural pathways. So that's what I do in the morning. Build new neural pathways with messages that help the behavioral, the things that the way traders should be behaving. So if I take to pull the trigger without hesitation session, that session is a 7-minute session. It's an audio session. I turn it on. It relaxes me. You need to get into an alpha brainwave state, which is just sitting in your chair, closing your eyes, taking a few deep breaths, and then listening to a message in the first person positive. I am a successful trader. I even have what I call a flashpoint button. While I'm trading, I remind myself,
I am a wise and disciplined trader, and I do the things that a wise and disciplined trader does.
And that expression, I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does, is the basis of me when I trade. And a wise and disciplined trader doesn't move his stops. And a wise and disciplined trader follows his trading plans through 3 losses, takes that 4th trade, and so on. So I always start with that 7-minute session. Then I journal. And sometimes I journal for just 2 or 3 minutes. And if I could, I'd love to give just a quick process. It'd take me about 2 minutes. May
Sure.
I do that just on those of you who are not journaling?
I'm sorry?
Can I do that, George?
Yeah, sure, absolutely.
What I do is at the end of every trading day, I journal at the end of every trading day and the beginning of every trading day. This is the place where you're honest with yourself and you say to yourself, hey, nobody's here. It's just me and myself. Let's get honest with where I am as far as my trading discipline is concerned. And at the end of the day, what I do is I always start with and I'm handwriting. And because I think handwriting is another way to build a positive neural pathways through kinetics. So I write into my journal and I say, today was a great day. Today I took every trade my trading plan told me to take. I initiated every trade. So I always start with something positive, even if there was nothing positive. Write something down. Today I showed up for my trading day. I felt good. I was ready to go. That's good enough. Something positive. And then I expose something that I need to change today, and I take responsibility, but I don't beat myself up. So my second sentence would be, today I did something that's unlike me. That's the way I start. Or un-Norman-like. Or use your own name. Un-George-like. Today I did something un-George-like. I moved my stop because I felt the market makers would take out my stop and continue up. I don't know why I had that feeling. And then, so you're admitting it, and you're admitting it, but not owning the habit. You're saying, today I did something I was beside myself, is another expression I use. And then explain what you did and why you did it. I moved my stop because I was afraid of whatever. Tomorrow I will be the stop king. And then you make a commitment about how you're going to change that. Tomorrow I will be the stop king. Tomorrow I will adjust my stops and adjust my risk management according to my trading plan. And I always end with, I am a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Boom. That's my afternoon journaling. Then in the morning, after I take my mental training session, the first thing I do is journal. And I take that last part of my afternoon from the night before, and I say, today I am the stop king. Today I will adjust my stops as, I could repeat it, or I can flow with a new way of expressing that thing. The same thing. I will move my stops according to plan. I will do that because I am the stop king. And then I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Now, if you can do that, state in the afternoon, at the end of the day, state what went right, something that happened good. Then state a problem, but identifying it as something that's other than you, and then why you did it, and then make a statement of correction, and then I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. And then in the morning, rephrase with the corrective statement and end with wise and disciplined trader. You do that kind of journaling, and I've just given you 5 minutes at night and 3 minutes before you start trading. It will change the way you focus and trade. It'll improve your trading.
Yeah, no, Norman, it sounds to me now. Again, I'm not a psychologist, but it sounds to me a kind of an interpret, and I think it's very good. Kind of interpret. Maybe I'm wrong here, but cognitive behavioral therapy, kind of for the active trader, if you will, which I think is very good. I think you've hit some rather important points, and that is, the right behavior, the right attitude, and the right action when you put your mind to it. So I think that's very good. I commend you on your uh, time in the industry, and certainly dedication to this, to the cause, if you will. Tell me, if we can dive in. Um, are you a technical trader? Are you fundamental? Are you a kind of a everything combined? What do you like to look at in the markets? Um, uh, that's the bell in New York. Give us a little bit of your trading styles, a little bit what you like to look at.
Well, I'm a technical trader solely. I mean, I make my moves based on the technical indicators, of which my favorite trigger point indicator is are candles. I believe in the candles. Maybe it's because they're a certain reflection of emotion in the market. But what I do is I I I'm, I look. I have a fundamental overview in my mind. Many times, if I believe that we're in a strong uptrend, I will only take long trades in the ES, for instance,
Hmm.
or in gold or whatever. I trade primarily ES, gold, crude, and the grains in the summertime. Anything that's kind of active. I also buy and sell stocks, um, and mostly in the tech sector. And we can talk about that a little later if you want. But I think in general, I look at something. For instance, right now, uh, I'm noticing you had I think Milton had a chart up of the S&P and
Yes.
how it continues. I look for repeating patterns. Um, but before I even mention that,
Sure.
right now my entire the umbrella that hangs over the entire ES market and many other markets is of course the interest rate story. As long as interest rates stay low,
Right.
there are very few attractive places other than the U.S. stock market.
Correct. Correct.
And so,
Absolutely.
therefore, anytime I see the market take these constant 5, 6, 7, 8, 9% hits, and nothing has happened with interest rates, you know that this is going to get back to the trend. I mean, you don't know,
Correct.
but that's the high probability play. So what
Right.
I look for on a daily chart, for instance, is a repeatable pattern at the bottom of these at these turnaround points. And the chart that he ended up, anybody cares to look at an ES chart, what you'll see is that there are daily engulfing patterns at the bottom of each of these corrections that each led to a nice return to the high over and over and over again. Yeah, I think look at there it is. You're seeing the each time you have this dip, you've got an
Yes.
engulfing pattern. Even
An
the one
engulfing
before
pattern.
that,
Absolutely.
that's a nice big white candle right after that first engulfing pattern that you
Sure.
can take advantage of. The next one again, and then you saw a false one um, that happened. So, but then led by another big comeback. And even further back, you're going to see this happen. So as long as we're in an interest rate, a low interest rate, the kinds of interest rate that we have right now, um, that is that's something that I always look for, and as you can see on this chart, you could have
Sure.
benefited by. So I look for repeatable patterns. I think that's, and especially against a broad fundamental factor that interest rates are so low. Now, the thing about, which brings me a little bit to bond trading. I've been looking for the bonds. I've been trading, over this 30-year, 35-year span that I've traded. The one thing I know is that when bonds go in one direction, they'll go for a very long time. And yes, they've gotten to the 150 and back to 135, and they've kind of topped, just like the when you look at the bond chart, similar to the S&P chart. But what what'll happen is that when you get two interest rate hikes in a row, then you can then the odds go with seeing interest rates rise for a long time, or bonds to fall for a long time. So when that happens, I'll be looking at. So I look for these broad fundamental features, and then look for the trend to develop based on that in a technical way. So I'm looking to short bonds at some time. Certainly not yet, but a lot of the rhetoric, I think you mentioned something about it this morning, is pointing toward the time may be coming soon, but it's not here yet.
Right. You bring up some interesting points. What we've been discussing as of late, within the last couple of weeks or so, you mentioned yields, and one of the interesting things, and we picked up on this several years back, kind of an interesting dynamic. The yield on the 10-year and the yield on the S&P. If the yield on the S&P is higher than the 10 yield, and right now it's not at this moment, with the 10-year being 1.997, the yield on the S&P being 1.92. But again, if you see the yield in the S&P higher than the 10-year, you have this proverbial bid, if you will, in the marketplace. Right now, again, a little bit of a turnaround in that with the yield increase in the 10-year. But again, I think you bring up some really poignant things with respect to trends and again, I think we've been in a range for a while. I think you discussed that. Let me ask you this: how are you looking at external news, both globally and domestically, and its impact in terms of just how to trade a market? Certainly, you have your affirmations, if you will, which I think is great. But how would you recommend to a trader, how would you suggest to a trader to approach a market such as this? It's been rather volatile, but again, range bound in terms of news and how to digest all that news.
Well, I'm not I mean, I'm a proponent of news from the
Sure.
standpoint of kind of having fun with it, with relation to seeing what happened because of the news. I mean, it's just so many times you have a piece of news that should be negative and the market responds positively, and then
Right.
justification after of why that happened. It was already in
Absolutely.
the news. It was already, but I'm a believer that the price that is being traded right now is a culmination of all facts known about that situation and that commodity or ES or whatever, what contract we're trading, and all things perceived to be known for, and I'm going to say now, a 2 to 3 month period of time. That used to be a 6 month period of time, but the market can't look out that far anymore because of the fact that we get information in so quickly, and that number really may be closer to 6 weeks out. It's hard to predict. It was much easier to say that markets were much smoother and easier to predict when news didn't travel so quickly.
Yeah.
And affect charts the way they do. So, I think that today's price is an indication of what we all know right now about
Right.
that, and what we perceive it to be the future in the next weeks. So that's the way I see it. And so to me, it's all in the number. Past that, it's technical trading from there.
Sure. No, I absolutely. Is there anything that you're looking out into? Let's go out a little bit further in a few weeks, but certainly, let me, even before that, let me get your take on oil. I know you watch, you trade oil, CL. I'll bring up the CL chart here. Anything that's jumping out at you? Anything that you can comment on?
Yeah, if you would zoom in on just the last couple of
Yeah,
months where we
absolutely.
broke 60 and come down, and
Got
I'm
it.
going to tell you something that I really don't suggest people do. But you're asking me what I do, and I think if you got deep pockets, there is a process here that I trade in oil that's worked for me, and you're going to see it having worked on this chart. And with all the with all the technical love I have, I'm about to give you something fundamental first,
Please,
and then
by all
technical
means, by all
second.
means.
When the price of a commodity, and I'm not talking, it can't be a stock, it's got to be a commodity,
Mhm.
something that's dug up or something that's grown,
Sure.
or something that's mined on an asteroid. And we'll get to that in a second. But what what
That's the topic for another show.
yeah. Maybe never, but the when the price of a commodity gets too low, then
Yeah,
the supply will dry up, and even a weak demand curve will eventually overtake the supply curve, and the market will start to go higher.
understood.
And conversely, when the market gets too high, the supply comes in, all of a sudden it overtakes demand, and the market comes down. And that's basic
Sure.
supply and demand for a commodity. So in the case of oil, so what I look for is a market that is in a 20 or 30-year low, or
Hmm.
10 to 20, 30, very low uh, with respect to a decade price. And in the case of um, of oil, when oil broke $50, it started to make sense to take a look at. Now, this is a low that if you can go back further, it's lower than that, but you can see
Sure.
how it didn't spend a whole lot of time even below. I think it almost hit $26 or $27 in that. So if you're going to, but this is a buy and hold strategy that I'm talking about. So if we can go back to, so I wait till a commodity is at a 10-year low or a 20-year low. Or in this particular case, when you see those big falls in a flash, I know that I have deep enough pockets to do this, because in the end, this is going to work for the majority of markets. What you do is it's called scale trading. You've probably heard of it. It's very dangerous. What you're doing is, let's say the market. I waited actually till the market broke 49. My first buy was 49. I buy one contract at 49, and then as the market goes lower, I'll buy another contract at 48, and then at 47. And if the market rallies, I sell the 47 at 48, the 48 at 49. And the first contract I bought, the 49, I'll sell at 50, and I'm out of the scale. And as the market turns sideways, I'm going to be buying at 40, 49, 48, 47, then selling it at 47 to 48, rebuying at 47, selling again at 48, and so on. So I'm running what they call a one-by-one scale. And it only works with with again physical commodities, and if you've got deep pockets, because this market could go down to 25. Don't think it will, but it can. And you can see what happens is, on the first salvo, like it did here, you would have gained a lot of money buying all the way down to 45 and then selling up. I mean, that's you would have made nice $1,000 chunks a couple of times, put about $14,000-15,000 in the bank to fund you for the next move down, which may be happening now. So that is, and it's something I don't recommend to people. It's something that I do. It's only for really experienced people. But the idea of letting your losses run and limiting your gains, you got to be an idiot.
Right.
And so I'm an idiot from time to time because I've seen it work. Now, the problem here can come with markets when you roll these contracts out. Sometimes you're paying a premium, and therefore all your scale cells have to reflect that increase.
Sure.
So if you're in a market that rides along the bottom for a long time and then takes a dive, you may be holding a lot of positions for a while and
Sure.
upping your
Yeah.
basis because you continue to roll. But of all the markets, crude is one of the better ones and has a lot smaller premium as you look out. Sometimes it's even backwardation. So
Sure.
in any event, that's how I'm approaching the market, believing that it can't stay down here forever. But I do think it can ride in this. I think I can get a lot of chop out of the market between 40 and 50 for a long time. I don't know. But if it
Got it.
does, I'll be taking advantage of it.
Do you mentioned supply demand, and I have to ask this. I know again, we talked about it's difficult to digest some of the news at times. What we do is we bring out news, and we point to price action and volume changes in specific securities. Um, so my question for you is, considering demand and supply, do you Do you keep an eye on, at least indication or rhetoric that comes out with respect to OPEC or again, it's such a hazy area where everyone has an opinion in terms of where production should be and shale producers and so forth. How do you include that into your at least your methodology in approaching a trade in West Texas Intermediates specifically, or do you just still stay to the technical?
That's a good question. And as I was thinking about it, I was going to just say, no, I'm a technical guy and I think everything's in the price. But that's really not the truth when I think about it. Um, you know, I believe because of fracking and our ability to control our own destiny in oil and I get this from a futurist think tank I'm at.
Sure.
I attend every year. I I pay $10,000 to sit in a room with some of the most brilliant futurists in the world, and the idea of fracking and the potential that is there is even much greater than what's reported. And so I believe that the basic structure, for instance, of crude is has changed, and the lofty prices are going to be a lot tougher to get to, short of some sort of war in a spike. But I think we're sitting at a much lower basis than we have, and that's why. So when I see certain fundamentals happen, like fracking, and then I watch our inventories and so on to some degree, but most of the time that's part of me rooting from the positions that I'm taking on based on the technical wherewithal,
Sure.
because I know that you hit your head so many times. You say, well, how can that happen? You've got all this negative news. How could it be up? You have all this positive news. How could it be down? I think the price does say it all. But in general, that whole thinking, what I just talked about is in the fracking, has prevented me. What's going to happen now is I'm waiting now to begin my scale at 45 and not at 49 like I did before.
Right.
Because I
Right.
believe that a number of things. Usually the second salvo, when it tests the old low, which it may do here, you get a break and a run, and the stops are hit and so on. That's what I want to take advantage of. So because I have a certain fundamental theory in my head that I want to trade by, fracking, change in who's controlling the world of oil, um, U.S. now, and not so much the Arab states, the Emirates, and so I use that in order to say bring the beginning of my scale down. So yes, I do watch it, and that influences the structure that I bring to a trading scenario like this. But once I'm in it, I stick with it.
Got it. No, absolutely. I think that's a great thought process into approaching a trade, and I would imagine quite a bit of folks would subscribe to that. Norman, thank you for joining us. We're coming up to the 10 o'clock hour. Folks, this is Norman Hallett from thedisciplinedtrader.com. Norman, thank you so much for joining us on Unusual Activity. We hope you come back. It's been absolutely informative, both from a cognitive perspective and a trading perspective. We like to blend the two. Thank you for joining us, and we wish you a good day.
Thank you, George, and thank Milton also for his technical analysis. I actually learned something from him early this morning, so thank you.
Great. Thank you, Norman. Folks, we'll get back into some of the specific news that is impacting markets today and specific stocks as well. Let's get into the presentation a little bit here. We'll get into specific stocks. Bear with us and then we'll get into in terms of headlines, Sycamore near buyout of Chico's, CHS, according to Wall Street Journal, preparing new DuPont strategy paper, according to Bloomberg. Apple hits $710 billion market cap. CEO cites strong Chinese performance, according to the Wall Street Journal. eBay banned from selling ads on eBay, according to Recode. Interesting headline there. Target TGT settles for $3.9 million in false advertising suit, according to SF Gate reports. A few other things here. Blue Nile downgraded to market perform from outperform at Wells Fargo. New Skin upgraded to buy from neutral at Citigroup. SMSI Supermicrocomputer initiated with a positive at Susquehanna. NICE Nice Systems downgraded to neutral from overweight at JP Morgan. Dun & Bradstreet upgraded to buy from hold at Stifel. Walmart says to invest 340 Canadian million dollars in Canada. This is, on the heels of the Target news of pulling out of Canada. KOOL Seska Therapeutics receives Indian approval for Marrow Express. IPXL downgraded by Goldman to neutral. SMCI initiated by Susquehanna with a positive rating. ONCY, Oncolytics Biotech's Reolysin for ovarian cancer designated orphan drug by FDA, which basically means that they may be open to receive funding. So that's interesting there. PCRX, Pakira resolves warning letter from FDA's Office of Prescription Drug Promotion. BLDP and Volkswagen VLKAY. Ballard Power signs $80 million transaction with Volkswagen. Again, Walmart downgraded to neutral from overweight at HSBC. A few more here, folks, that are moving this morning. ABBV, AbbVie risk reward positive at current levels, says Deutsche Bank. Apple Foxconn revenue falls 23% in January, but rises 25.9 on year due to strong iPhone 6 shipments. Qualcomm initiated with a buy at Rosenblatt. NLST announces appeals court refuses to halt injunction against controller chips used in SanDisk. This is the Ultra DIMM SSD. And of course, we have a healthcare conference. The Leerink Global Healthcare Conference begins today. We'll run through a few of the syndicates this morning. We have AMAG files to sell 1.6 million shares for holders. ACHN files to sell 10 million shares of common stock. Delcath System, DCTH, files to sell common stock and warrants. JONE files to sell 4.25 million shares of common stock. Therapeutics MD, TXMD files to sell common stock, no amount given. And Waste Connections, WCN, files automatic mixed security shelf. If you're new to syndicates, automatic mixed security shelf, basically it could be a combination of various types of securities, meaning preferreds, common, convertibles, various debt instruments as well. We'll pick out some of the larger insider transactions. We have TROV, Trovagene. We have a $2 million transaction by a 10% owner. We have Gilead Sciences, GILD, $1 million transactions. WMS, Advanced Drainage Systems. We have about a $500,000 transaction by the CEO. NVET, we have a $2.7 million transaction by the 10% owner. MLNK, we have a $400,000 transaction by a 10% owner as well. We have RXN, Rexnord Corp, we have $540,000 transaction. In Yahoo, we have a $645,000 transaction by a director. So again, some notable insider transactions this morning. We like to keep an eye on that rather closely, folks. So going into the 10 o'clock hour here, we have ES futures, S&P 500 futures, basically flat at 2062. We have the crude oil lower by about $1 here, folks, at $49.05. We'll see how this 1030 number influences volatility. And gold, we have a continued downtick, lower by about $4 at $1,228.10. We have the 10-year below that 2%, still at 1.995, but again, really hugging that 2% line. So, folks, thanks for listening. This has been Unusual Activity, powered by FinancialJuice.com, with George Avedon and Milton Marmonides, with special guest Norman Hallett of the Disciplined Trader. Thank you for joining us this morning. Have a great day, and wishing you good hunting.